going on, guys? In this video, we're going to be taking things back to the basics. We're going to be looking at how to pick really good stocks, and the best way to do that is looking at my favorite metric. Call it a metric, call it a fundamental, whatever you want to call it, but it's an actual document that you need to look at, and I'm going to show you exactly how to do that. And if you already don't know from the title, we're talking about earnings reports, right? You're not having any of these big YouTubers really talking about that. They're talking about candlesticks and Fibonacci sequence and different cryptos that are going to go to the moon, or they're reporting about the next GameStop stock, right? All of that is sexy and flashy, but it's not teaching you anything. It's mainly entertainment, and you're probably picking some garbage stocks. Now, I'm no multimillionaire, but I've had some decent success in the stock market. I've picked some really good stocks that have performed really well over the past 3 years. So I want to pass that knowledge on to you guys. Here's exactly how I pick stocks, and here's why I think the earnings report is the most important thing to look at. I'm going to jump on the computer and I'm going to walk you through how to analyze or dissect earning reports. But before that, just picture this. Picture your friend has a business, right? And they want you to be an investor. They say, hey, I know you have a couple of extra bucks laying around. I'd love for you to invest in my company. The first thing you're going to want to know is, are they profitable? Are they making money? And more importantly, are you going to make money in return, right? That's the key to investing. Are you going to make a positive return on investment? So you sit down with your friend, and your friend says, all right, well, I have $300,000 worth of debt. I have made $0 whatsoever, and I'm paying all of my employees way too much money. You gonna invest in that? Probably not, because that company's not gonna go anywhere. But you throw money into Tesla, you throw money into these other big tech stocks, that's the same scenario, just on a bigger scale. They have millions, if not billions of dollars worth of debt, have made no profit whatsoever as a company, and overpaying all of their board of directors, CEOs, whatever you want to call them. They're just overpaying them for a company that's not even turning a profit. You know, that's great and all, but when you're investing in Tesla at $889, thinking that you're gonna make $1 million, and next thing you know it's $545, which, guys, let's just do this really quick. That's a 38% decrease. So for every dollar that you just gave to Tesla at that price, they lost you 38 cents, all right? Elon Musk is not doing you any good if you invested back in January, right? You're losing a lot of money. Some people, if you put $100,000 into it, boom, you just lost 38 grand, all right? You want to find stocks that instead are going to make you money over the long term. Now, yeah, it is really tempting to just kind of look at Tesla a year ago and think, well, man, it was all the way down at $100 and then it went all the way up to $900, or it almost hit $900. That's great and all, but past data isn't going to determine future success. And if you look at their earnings, you wouldn't want to touch it, because it goes back to that scenario with a friend who has a business that's making no money, but they're flooded in debt, right? Now, let's look at the other option. You have another friend who has a business and they're making $1 million a year. Profit, not revenue, profit. As in, after everything's said and done, after they pay their employees, they pay their expenses, their cost of goods, whatever it might be, they're walking away with $1 million. They say, hey, I want you to invest in my company. First, you'd probably ask them why. You have more than enough money. And second off, you'd say, yeah, absolutely, because you know that's going to be a positive return on investment. So let's look at a boring stock, right? Let's look at something like Target. Here's Target. All-time high today, $219. We go back to July, it was $117, right? Within not even a year, it went up 100%. And it's a boring retail company. It's a company that your girlfriend, your mom, your sister are all shopping at. But if you look at their earnings, they are killing it. Not only are they making a lot of money, but they're making so much money that they could pay you dividends. And they pay great dividends, and they've been doing that for 50 years, over 50 years, paying you dividends and increasing those dividends every single year. These are the companies you want to look for. So let's get into the fun stuff, and that's exactly where and how to look at these earning reports. We're on TradingView right here. I love looking at TradingView. It's probably the best candle or charting software out there, but it's very limited when it comes to the fundamentals. You do have down here, the E stands for earnings, the D stands for dividends. If you click on it, you can at least see Oh, okay, cool. It looks like their estimate was 1.6, and it looks like they ended up reporting 2.79, and that's a 74% surprise, right? That's 74% more. But what does that all mean? What do you mean 1.6? What's 1.6? What's 2.79? That 1.6 is how much money they think they're going to make per share. So if you have one share, which at that time cost you $168, they think, all right, you gave us $168, we're going to give you $1.60 in profit. That's what that means, right? But instead, they beat that, and they made, as you see right here, 2.79. So that $168 share that you have, they just paid you $2.79. Doesn't sound like a lot, but if you add it up, they're making billions of dollars, right? And this isn't the best program to use to look at the earnings. We're gonna jump over to my favorite website, Seeking Alpha, and we're gonna dig into Target's earnings. So just type in Seeking Alpha, and then up here, you're gonna do TGT for Target. We're gonna click on that. Don't worry guys, we'll also look at Tesla's earnings. But here's Target. So again, here's a nice little chart. You could go over to the financials, which isn't earnings, but it does give you some good information, right? So this isn't about teaching you how to read an income statement. We're actually gonna click on the earnings section. Okay, so this is the earnings section of Target. And you could see right here, I mean, we were looking back in this one, if we look at the most recent Target earnings, look at this, another surprise. They estimated $2.21. They made $3.69. Target is absolutely killing it. Anyway, if we go and look at it all, you can see again, this shows you pretty much the same information right here, right? They beat their earnings. It may be a little off. This says 1.46. We jump back, 1.48. So the estimates may be a little off, but your actual EPS, which stands for earnings per share, was $3.69. All right, now there's more than just this, right? So this is the earnings summary. And if we scroll down, we could see stuff like Target compared to its sector. What else could we see? Target's 5-year average, what it's been doing for the past 5 years. We keep scrolling down. You could kind of see the trend of earnings. Obviously, you want to see earnings going up. So this is by quarter. So each quarter, the darker blue represents what they think they're going to make, and then the blue, the lighter blue, is what they actually make. So you can see the past 4 quarters, Target has beat their earnings. Now they do predict what they're going to do in future quarters, and you can see Target doesn't think they're going to necessarily beat what they have done these past 4 earnings, but that's mainly because the coronavirus has really helped retail companies. And if you keep scrolling down, again, there's just a bunch of information, but what I think is even cooler, which you guys need to learn about, is you go down to here, and if we click on this, here's an SEC 10K. This is where Target needs to report every last detail, all of where their money's coming from, where it's going, all that good stuff. And if you scroll down, I mean, you can see there's a lot to read. But in all of these 10Ks, they always have stuff like this. I think this is very cool. You could really look into everything because, guys, just looking at a number, okay, great. Target made $3.69. Well, where did that $3.69 come from? Is it maybe just one Target store, all the Target stores, maybe just their electronics, their cosmetics section? Where is that money actually coming from? So if you dig into the 10K, look at this. This is showing all of their stores. It's showing how big their stores are. We keep scrolling down. Again, you could read up on all of this. It's showing Target compared to the S&P 500, its current peer group, previous peer group, all this good stuff. Let's see. Let's keep scrolling. What's here? This is Gap. This is like accounting stuff. Here we go. So here's some sales, and then it breaks down everything. So instead of just looking at sales and earnings, this is a little bit more detailed. So we can see here's Target's sales, and this is in millions. So we got 92,000, right? Other revenues, 1,000. Total revenue, we got 93. And then it shows here's the cost of sales. Here's their expenses. Here's their depreciation and amortization, their operating income. and it just keeps breaking it down for you more than what you're gonna find in even the financials of Target. So you could really dissect this, and I'm not here exactly to show you every last bit, because this video would be an hour long, and this isn't meant to be an hour long. This is more to just point you in the right direction, and you gotta learn how to read this yourself. Obviously, when you look at earnings, you wanna know, okay, are the earnings going up? How are they doing year over year? How are they doing last quarter compared to this quarter? Did they beat earnings or did they miss earnings? But you could just really go through, and I mean, look at this, guys. There is so much stuff. There's so many charts in this that you could really go into and dissect. And we'd be here forever if I was gonna go through all of it. But what's also really cool, a lot of companies are starting to buy Bitcoin. And by a lot, I mean right now, as I'm recording this video, maybe there's like 10 publicly traded companies that have Bitcoin, or probably even less. But a big one that we all know is MicroStrategy and Tesla. But will Tesla drop their Bitcoin? We don't know. It was fun watching all of the Twitter wars with Elon Musk. I don't get how he could run 4 different companies, raise a family, and then still be able to respond to random people on Twitter. I don't know where he gets all this time, but what's really cool about these earning reports that none of the financial statements or balance sheets are going to show you is companies acquiring certain things like Bitcoin. Say you want to see, hey, how much Bitcoin is MicroStrategy buying, or how much Bitcoin is Tesla buying? You could actually go into the 10K forms and you could look at how much Bitcoin they are acquiring, why they are acquiring it. And I mean, not just that, right? If we were to read through Target's 10K, it'll show other stuff, like why are they making certain moves? Maybe they're going to try to, I don't know, open more stores or something like that. It will be in the 10K. That's pretty much like their plan. Like, hey, here's what we've done over the past year. Here's what our goals are. It's more than just numbers. And if you're someone that maybe you're not mathematically inclined, maybe you don't like looking at all these numbers, you'd rather sit down and read through this stuff and actually dissect words, this is the best way to do it. It's better than numbers. It's going to show you, here's Target's plans, so you know exactly what it is. And like I said, we would look at Tesla. So let's look at Tesla. So if we go over and we go to earnings summary, now, yes, they did beat their earnings, but that's because of them selling 10% of their Bitcoin position. They actually didn't make any money selling cars. They have never made money selling cars, and they're a car manufacturer. So that's why I don't invest in Tesla. But if we scroll down, you could see that it beat earnings there, didn't beat earnings here. And just because it beat earnings, it doesn't mean it beat it by a lot. Some of these, if we just jump over to their financials really quick, you could see if we go down to their earnings, I mean, them actually making money has been a very recent event. But yeah, there's a bunch of stuff that you could really look into. And let's see, one last thing that I want to look at here is this is actually, so we got a 10Q, a little bit different than a 10K, right? 10Q, as you can see, is their quarterly report. And with Tesla, let's just show you. If I hit Control F, see if we type in Bitcoin, right? You can see right here. Here's their digital assets. During the 3 months ended in March 31st, 2021, we purchased an aggregate of $1.5 billion in digital assets comprised solely of Bitcoin. So that's a great way to look at, hey, I want to know if this company is doing X, Y, and Z. Maybe you want to invest in a company that's investing in Bitcoin, which allows you to indirectly invest in Bitcoin. Maybe you don't actually want to hold on to it because you think it's too risky. You'd rather leave it to the institutions, which, hey, there's nothing wrong with that. This is a good way to see what companies are holding on to them and why. You could read through this and it shows them what they're doing, what they determine fair value of Bitcoin to be, all of that good stuff. And then maybe you want to see if, I don't know, Tesla's going to invest in Dogecoin. The financials aren't going to show that. You're not going to find Dogecoin on a line on their balance sheet. You have to look into their 10Ks or 10Qs, and you just hit Control F on the keyboard, type in Dogecoin, and it'll pop up if they're invested in it or not. But I think I really gave you guys a good understanding of how to look at earnings, where to find earnings reports, how to look at the 10K and the 10Q. Again, this video could be hours long if I were to actually go through these documents. They're very, very long documents. If you're someone that likes reading, this is perfect. If you're someone that just likes numbers, you could also look at that. It does you just as much good. You pretty much want to see companies that are at least making money, or even if they're not making money, at least they're getting closer and closer to making money. My one guilty pleasure was Shopify. That wasn't making any money. It's making money now. But when I invested in it, if you looked purely at the earnings, it wasn't the best bet. I didn't know what I was doing back then, so that's why I invested in it. It was just one of those lucky ones that ended up turning a profit. But that is how you look at earnings. I think it's one of the most important things, guys. If you like this video, smash that like button, subscribe, and as always, I will see you guys in the next one.